Hi everybody, Lance from thetatraders.com here. In this video I wanted to go over a safeguard trade that I did, which is a 1122. I actually bought two puts below the two sold puts. Entered it about 70 days ago, just closed it today. I want to show you how I managed it. A little bit more complicated, but pretty straightforward in terms of how I manage. So let's look at the trades. All right, so on February 9th, about 2 months ago, a little bit more, did a 300 with safeguard 1122. So right here, I did a put debit spread at 48.50, 4800 on the bottom, paid a debit of 8.6. Then I did a 2-2, essentially a put credit spread with two of the two contracts, sold the 43.50 and bought the 40.50. And that took in a credit of 7.9 per contract. If you do 7.9 times 2, that was our total net credit, minus 8.6. And what's good about this trade is it uses quite a bit less buying power than if you didn't buy those two bought puts at that 40.50 right here. It only uses about $4,000 total initial buying power and cash that you leave on the side. Then this morning I was saying, considering closing that put credit spread and rolling the 4800 up to 4825, because I was able to get a decent credit, 2.75 on it. And then I still have a 25 with PDS and locked in profit. So I did close at 1038 today, closed the 43.50, 4050 at 1.8 per contract. Net profit is the initial credit minus 1.8 was 12.2. And then I rolled the put debit spread. I rolled the sold put from 4800 up to 4825, took in 2.6 credit on that as well. So my net loss on the PDS, I bought it at 8.6, sold it at 2.6, got a net loss of 6 on the PDS. Net profit was 12.2 minus 6 on the put credit spread minus the PDS. That's 6.2. ES has a 50 multiplier, so do 6.2 times 50. You get $310 of net credit in the account. And I still have the 4850, now a 4825 put debit spread, no longer a 4800, but I rolled it because I got that 2.6 credit by just rolling up that put debit spread. Essentially, what I did was I closed that PCS, took all the risk off the trade by doing that because it paid for the put debit spread and then some. Then I rolled the short put of the PDS to get a little bit more credit to make the trade worth it. And based on no more risk on the trade, made $340 off about $4,000 buying power in cash for the trade that I took. And I still have a pay for 25 with put debit spread. 25 times the 50 multiplier can make $1,250 if that market drops below it. So I wrote note to self, make a video on it, and that's when I have time, because I'm making a video of it. At least I think I am. Anyway, this is a pretty interesting trade that I do like how you use quite a bit less buying power. It only needs about $4,000 in buying power compared to about $11,000 buying power plus cash if you just do a 112 where you sell two naked puts and buy one put debit spread. You still have a pretty big trap of the 50 with. I ended up converting it to a 25 with, but for $4,000 buying power plus cash, you're able to make 50 times 50, $2,500, or at least right now I can make $1,250, and I still got a good return. So it's a win-win in my book because got a good credit for the trade, and I still have that put debit spread for protection. Again, if you're interested in seeing other trades like this, join at thetatraders.com. And this is for the safeguard trade or the inner circle for lifetime memberships. If you have any questions, leave a comment down below this video. I'll read and respond to all of them. And have a good rest of the trading day.